Passive investing is based on the notion that it is not possible to identify winning stocks on a regular basis. Instead, portfolios should mimic the overall market, assuming only market risk. PriceTarget Research's value trend ratings consistently identify stock market winners, directly challenging the assumptions underlying passive investing. Welcome to PriceTarget Research. I'm John Lafferty. In this short video, we're going to talk about our value trend ratings, the objectives we had in designing them, the components of the ratings, some brief mentions about passive investing concepts, and then the rating performance over a 35-year period of the value trend ratings. For a more comprehensive view, check out the longer version of this video. PriceTarget Research's value trend ratings are an overall measure of a stock's attractiveness relative to the universe. They have produced superior multi-decade results and are updated on a weekly basis. There are two components to the value trend ratings, the appreciation score and the power rating. The appreciation score measures the potential appreciation of the stock from its current price to its warranted value or price target. The price target relies on the CFROI valuation metric, looking at discounted cash flows. And in this example, for instance, the stock is 72. The warranted value or price target is 100. So the warranted appreciation from the current price to the price target would be 39%. And as you can see here, when measured against the entire universe, that's a score of 62, meaning that that appreciation is better than 62% of all the stocks in the universe. The power rating measures the timeliness of purchase relative to the universe, again 0 being the lowest, 100 the highest. In this example with the timeliness rank at 81, it's based on the stock price performance of the individual company, changes in analyst expectations for the company, and finally what's going on in its industry group. Are other companies in the same business doing well also? The appreciation potential and power rating are put on a grid, as you can see here, the horizontal axis being the appreciation potential, the vertical axis being the power rating. And the upper right-hand quadrant in green represents all the combinations of appreciation score and power rating that yield either an A or a B rating, buy rating. And the lower left red area is all the combinations that yield a D or an F. The white area in the middle are neutral ratings of C. 30% of the universe is in the buy area, 30% in the sell area, and the remaining 40% is neutral. This is called our PriceTarget Research Rating Map. It's reflected in all of our research reports and provides a nice visual way of understanding how the value trend rating was determined. Using the numbers we were just looking at, for instance, with a power rating of 81 and an appreciation score of 62, that stock ends up with a B rating comfortably into the buy zone. The challenge in setting up a rating system is the concept of passive investing. And its adherents believe that it's not possible to have a systematic way of identifying winning and losing stocks. Our evidence, as we've looked at research over long periods of time, much of it our own research, is that most of the time, for most companies and securities, nothing much of importance is happening. And their future prospects are therefore only average. But the key is there's action in the tails. What do we mean by the tails? Well, the extremes. So if you look at a list of companies arrayed by their value trend rating and look at the extremes of those lists, either positive or negative, there is a very significant value to focusing on both the highest performing stocks as according to the value trend rating and also the lower performing stocks. We have constructed 5 portfolios over the period 1985 to 2019 corresponding to the 5 rating categories A, B, C, D, and F. And we updated then the members of each of those categories on a quarterly basis. And the performance was outstanding, has been outstanding, both on an absolute and a risk-adjusted basis. The chart shows the cumulative performance of the 5 rating categories. The portfolio is built out of those 5 rating categories over the period 1985 to 2019. And as you can see, the A's substantially outperformed the average stock, and the F's substantially underperformed. They were well ordered. The A's and B's beat the D's and F's. The cumulative results are stunning when you look at the actual numbers. The A portfolio, again with quarterly review, generated a cumulative return over the period of over 10,000%, whereas the C-rated stocks, the average stock only generated a return of about 1,400%, and the F-rated stocks almost disappeared. Again, the ratings were well ordered. The A's and B's beat the D's and F's, and substantial identification of stock market winners and losers. That's a wrap. Until next time, you can visit us on the web at PriceTargetResearch.com, where you will enjoy comprehensive ratings and research, relentless updates and alerts, peer sector and industry reports, and model portfolios tied to key investment objectives. You can also find more of our videos on YouTube at YouTube/PriceTargetResearch. Finally, you can find our content exclusively at metrics.com.